Ladies and gentlemen, good day and welcome to Mamata Machinery Limited Q4 and FY’25 earnings conference call hosted by TIL Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sayam Pokarna from TIL Advisors. Thank you and over to you, Mr. Pokarna.
Thank you, Renju. Good afternoon, everyone, and thank you for taking out the time to join us in this Q4 and FY’25 earnings conference call of Mamata Machinery. The investor updates, including the investor presentation, have already been uploaded on the stock exchange and on the company website. To take us through today's results, we have with us from the management team Mr. Apurv Kane, Chief Executive Officer, Mr. Deepak Modi, Chief Financial Officer, and Ms. Madhuri Sharma, Company Secretary and Compliance Officer. We will begin with the brief overview of the financial and operational performance from Mr. Kane, followed by a Q&A session. Please note that any forward-looking statement made during this call should be considered in conjunction with the risk and uncertainties that we face. These risk factors have been detailed in our prospectus document. With that, I would now like to hand over the call to Mr. Kane. Over to you, sir.
Good afternoon, everyone. This is Apurv Kane, CEO of Mamata Machinery Limited. On behalf of Mamata Machinery, I would like to extend a warm welcome and thank you all for taking the time to join us on our Q4 and full year FY’25 earnings conference call. Before we begin with the review of our performance, I would like to highlight two important aspects. Firstly, regarding our investor communications, frequency going forward, and secondly, some general perspectives on the nature of our business. Firstly, in line with our commitment to transparency and proactive engagement with our investor community, we are instituting a regular practice of hosting biannual investor earnings calls following the announcement of our Q2 and Q4 results going forward. We believe this will provide a consistent platform for meaningful dialogue, detailed updates, and timely clarifications on our business performance and strategic direction. Additionally, we will continue with our quarterly investor updates, such as press releases and investor presentation. For further clarification and discussion, you may reach out to our investor relations advisor. Secondly, on our interactions with investors and analysts so far, I want to clarify and reiterate that Mamata Machinery's business is inherently seasonal, especially when evaluated on quarter-to-quarter basis. This is true both in terms of top line and especially in terms of profitability margins. The reasons behind this seasonality has been detailed in our recently published investor presentation, specifically on slide 30. Given this context, we strongly encourage all stakeholders to assess our financial performance on a rolling average basis, looking at our last 4-quarter period in cumulation. This approach provides a more accurate and fair representation of our growth trajectory, profitability, and evolving financial ratios. Due to possibility of order deferrals and revenue clustering in a particular quarter, some periods may appear exceptionally strong while others may seem subdued. Averaging over 4 quarters helps to smoothen out this volatility and offers a truer picture of our operational progress. With these clarifications in mind, let me now walk you through our performance for the year. At the headline level, Mamata Machinery reported revenues of rupees 2546 million for FY'25, representing a 8% year-on-year growth. This achievement is particularly noteworthy considering that several significant orders originally scheduled for delivery in Q4 were deferred to Q1 FY'26. These included orders in transit to export markets for final inspection or orders delayed due to logistical and administrative challenges at customers' end. Had these orders been realized within the financial year as initially planned, we would have delivered a much stronger double-digit top-line growth for FY'25. It is also important to clarify that the two key deferred orders mentioned pertain to our packaging division and are relatively decent value. Consequently, while our reported packaging division sales show a 4% year-on-year growth, the underlying momentum remains robust and these deferred orders will be booked in coming quarters. Adjusting for this difference, our packaging top-line growth would have been impressive and our converting top-line would have been largely flat with a marginal decrease year-on-year. Turning to profitability, I am pleased to report that our net profits grew by 14% for the year, outpacing our revenue growth. This was driven by improved margins thanks to strategic initiatives such as higher contribution from higher margin products, selective product repricing undertaken last year, and more effective procurement practices along with certain changes in design which is inherent part of cost structures. On macro front, it is important to contextualize our performance within the broader environment. One of our key export markets is the US, is currently experiencing some turbulence due to recent tariff announcements. While the situation still remains fluid and nobody knows the final tariff structure, let me clarify that we are well positioned in this regard. Since domestic capacities in US are there for many products, the US import is from Canada, Europe, China and India. In case higher differential tariffs are imposed on Chinese imports, we might stand to benefit from it. In any case, it is important to note that these machines are high-end, technology-driven capital goods where purchase decisions are based on technical merit and product value and not solely on price. The main risk arising from current situation would be a broader US economic slowdown or a recession which would indirectly impact demand. At present, we do not see any direct adverse impact on our business. Looking ahead, Mamata Machinery remains confident in its growth trajectory for coming year. We are well positioned to scale up our packaging machines division and will continue to focus on innovation and operational excellence to capitalize on emerging opportunities globally. With that said, I would now like to open the floor for questions. Thank you.
Thank you. Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Once again, a reminder to all the participants that you may press star and 1 to ask a question. The first question comes on the line of Manish Goyal with Thinkwise Wealth Manager LLP. Please go ahead.
Yeah, thank you so much, and congratulations, Mr. Kane, for very good performance. Sir, I have a few questions. Sir, would you be able to quantify the deferment of the sales which has happened in the quarter four, both in packaging and also the press release mentions the converting machine as well. So, would appreciate if it is possible to share the details. That was the first question. And second question is on the, we have seen a very strong growth in attachments and spares in, particularly in quarter four. So, how should we look into it? Like, what was the reason for such strong growth, and how should we look at going forward? You, in your opening remarks, you alluded to the order pipeline seems to be quite strong. So, for FY'26, can we expect a much stronger growth rate, considering there will be spillover of revenues from FY'25, and you will have a regular growth from all the three businesses? I have a couple of more questions. I'll come back, sir. Thank you.
Thank you, Mr. Manish Goyal, for your questions. I will try and answer one question at a time. Your first question was about what is the quantum of deferred sales. The quantum of deferred sales is approximately 30 CR, of which about 23 CR was for packaging and balance was for converting. There was no deferment of sales in extrusion.
Okay. And sir, sorry, as we are discussing, so this entire 23 crores was probably the packaging machine for the US market?
No, there were majority of them that was machines for US market. The machines were already dispatched from our works, but they were in transit for to be received in our US facility for factory acceptance test.
Okay. And sir, the follow-up question was on the attachments and the spares for FY'25, and particularly quarter four, which saw very strong growth. If you can give perspective as to what was the reason and how should we see it going forward?
It is basically classification of what we would term as attachment. In case of extrusion, when we sell a machine, that includes every part of it, which includes the tower, which includes binders, which includes so it includes post-extrusion equipment as well as pre-extrusion equipment. The complete plant is considered as a machine. However, there were two orders that were executed in the last quarter where we had to send out basically upgrade packages, which is partial plants. Now, these are also quite high value, and therefore you see this sudden surge under classification attachment. So they were not considered as machines, they were considered as attachments.
Sure, sir. And I'll come back in the queue, but last question before I come back, sir. How should we look for growth in FY'26, considering spillover of sales from FY'25, and you also alluded strong growth potential in the packaging machinery, sir? Yeah, thank you, sir.
We continue to have a robust pipeline for packaging machinery orders. As planned, we are going ahead with exploration of various Middle East and African markets and find market for packaging machinery, and we believe that that will result in higher growth rate. For this purpose, we, as per our press release that was given some time back, Mr. Raj Shekhar has already joined us as our president with specific emphasis on growth delivery of packaging division. So he has already joined us and he is in process of doing exactly what we want to be done. As per our press release, as you know, he worked for Canmetal for a number of years, and before that he also worked for Mettler Toledo as well as for So he does have a very good background of machine building, as well as he has been related to packaging industry through Mettler Toledo for X-raying equipment as well as inline checkweighers and printing equipment.
Sure, sir. Thank you so much, sir. I'll come back in that. Thank you, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Lakshmi Narayanan with Tunga Investments. Please go ahead.
Yeah, thank you. A couple of questions. You report revenues in three different segments. Are the customers also distinct, and do they overlap across these segments?
They don't always overlap. There is definitely some synergy. First of all, the customers for packaging machines are essentially brand owners, or they are contract packers for brand owners. So they are different from people who make bags and pouches, or people who make film to make bags and pouches. So there is some overlap between the customers who make bags and pouches and customer who manufacture films. However, packaging machinery customers are a different class by itself.
Got it. And if you look at domestic and international revenues, if you can just give what is the sense, at a company overall level you give, but in terms of these three segments like converting, co-extrusion and packaging, what's the split of domestic and international across these segments?
For extrusion and bag making and pouch making, in terms of revenue, 71% of the revenue was generated from exports in the financial year that we closed FY'25. As far as packaging is concerned, we are either selling machines in India or in USA and Canada. We have not yet tendered the rest of the world, and that is the process that we have taken up now, and hopefully that is something that will deliver growth going forward.
Got it. And what is the average sale price of the machine in general across these three segments?
Average sales price can be as low as around 15 lakhs for a single machine, and it could be as high as about 9 crores for a machine. So it widely differs.
Now, in these three segments also, is there a wide variation, or in one segment the prices are usually very range bound?
It is already there mentioned in the RSP. No, never mind, but I will explain this again. In extrusion, it can be from about 1.2 crores to 9 crores. For packaging machines, it could be from about 50 lakhs to 3.5 crores. And for bag making and pouch making, it could be from 15 lakhs to about 2.5 crores.
And last year, what is the number of machines you made across these two segments? And how was the growth when compared to the previous year?
So we have, last year we have dispatched 238 machines overall.
Okay. 238 machines.
Yeah, of which 207 were for bag making and pouch making. There were 10 machines for extrusion. These are complete machines, by the way. As I explained earlier, these are complete plants. And then packaging machines, we have delivered 21 machines. Now, if you compare that to previous year, we have done 232 bag making and pouch making machines, 3 co-extrusion blown film plants, and again 21 packaging machines. Total was 256.
And in terms of pricing, both in international and domestic, what is pass through, and how do you manage forex issues in when you do international? Is it also a pass through? How do you handle that?
If the question is, do we hedge foreign exchange? The answer is no, we do not hedge.
Okay.
Because our import content is very low as compared to our export revenue, we get automatic advantage of hedging, and we don't have to do that separately.
Got it. And in terms of material cost, is it a pass-through? How do you escalate the prices if it actually swings either up or down?
Pricing, Mamata is known for keeping its pricing very stable. We try not to disrupt pricing as far as possible unless we are forced to do it. The cost of the machine, as I mentioned earlier, we believe very strongly that costing is inherent part of design itself, and therefore we can, by innovation, control the cost through design as well as through purchase. Purchase, there is a limitation how much you can bring cost down by purchasing prudently or driving a hard bargain, but the design is the key. Through that, you can really control costs, and that is what we do.
And in terms of the co-extrusion, that has been a good spurt in the revenues. Was it by design that it actually went up this year?
I would say that last year was the first year where we found actually traction to our strategy. There is a pivot that we made in about 2017, because in 2017 we basically got licensing agreement. Under that licensing agreement, we could then start offering what is known as barrier blown film lines, or lines with 5-layer or 7-layer and even now 9-layer blown film plants. And that technology we could start using from 2017-18 onwards, and that has now finally found traction since year before last, because the figures that you see in last year, most of the orders were booked in year before last. So the orders were actually booked in 22-23, executed in 23-24.
Got it. Thank you for detailed response. I'll come back in queue.
You're welcome.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Nipun Madan. We have lost the line of the participant. We'll take the next. The next question comes from the line of Rohan Dedia, an individual investor. Please go ahead.
Hi, sir. Can you hear me?
Yes, I can hear you.
Yeah. Sir, thanks for the opportunity. In the last call, you had mentioned how one of the strong USPs of our packaging machine is the ability to handle recycled film content. So, sir, just wanted to kind of get a sense on what is the size of the opportunity for the same in India. Like you said, a lot of machines may need to be upgraded so they can handle recycled content. And second, also wanted to know how competition is stacked on the same opportunity. Thank you, sir.
We have given press releases this year earlier where we have been granted certain patents for our sealing mechanisms that we have on our packaging machines, which would allow our customers to use our machines to run recyclable films. So we now have patented technology that is available for the company. If we talk about usage of flexible packaging material, that runs into millions of tons every year in India alone, and that is the opportunity in terms of size that needs to be replaced by recyclable material over a period of year. And that is the change that we will see over next 2, 3, 4, 5 years. And we believe that that is something that will give huge opportunity to Mamata, because that is the technology that we have been working on, and that technology has now been validated by issuance of patents by Government of India as well as patents internationally. So we have patents in EU, we have patents in USA also for similar technology.
Thank you. So would we have a size, and what was the expected size from the grade that we expect from the Indian market?
We don't have a size for this. I can only tell you that it's a huge opportunity for any company that can actually find solutions and deliver solutions to brand owners.
Okay. Thank you, sir. All the best, sir.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Manish Goyal with Thinkwise Wealth Managers LLP. Please go ahead.
Yeah, thanks a lot for offering opportunity again. Sir, you did alluded right now that we have got patent for the packaging machine. I believe it is for vertical form, fill and seal. So, would it be able to quantify what is the near-term opportunity, and have we received any orders from the ongoing trials with some of the potential customers where we had supplied the machine, sir?
We have since then installed a machine at ITC, and the film that they are using is recyclable film. And we are in talks with few other people to adopt this technology.
And sir, would it be able to quantify what is the near-term addressable opportunity for us in India and
absolutely near-term addressable opportunities that we are looking at is between 12 and 20 machines in coming 20 to 24 weeks. It's an opportunity where we are actively pursuing these opportunities, and we are talking to customers.
Sure. And would you like to give what is the size of the opportunity in US and Europe where we already have the patents?
There, our machines are already running recyclable films.
Right, sir. Okay.
So they have already started switching in a big way to recyclable films. Almost every new machine that we deliver runs on recyclable films.
Okay, sure, sir. And sir, on the capex plans, sir, in terms of plan for capacity expansion, or also in terms of are we probably looking at any inorganic growth opportunities? So if you can provide some perception over there, and also on the cash we have, which probably we have around 68 crores on the balance sheet. So what is the capital allocation plan, sir? And also, have we formed any dividend payout policy?
The cash that you see on balance sheet on 31st March is end of our basically working capital cycle at end of the year. So it basically goes into the a majority of that cash is used as working capital throughout the year, and by end of the year it comes back to the balance sheet as cash. So that is one part. Second part, we are trying to use this as a war chest going forward, looking at inorganic growth. We have said this during our roadshows also, that we are actively seeking inorganic growth, and whenever there is a development that is mentionable, we will announce it to market appropriately through a press release. Capex wise, as you know, that we do not have a machine shop and we do not manufacture anything in-house. So as far as capacity expansion is concerned, basically we might just need more space to assemble machines that we manufacture, and we will definitely try and add that space in our existing campus as and when required.
Okay. And sir, because a dividend announcement was quite low, so have you formed any dividend payout policy, and on capital allocation, how are we thinking, sir?
On dividend front, we will continue with our past track record of equitable dividend distribution. And as I said just now, we are trying to build a war chest that will help us with our inorganic growth plan. So we would like to retain those funds for future use for this purpose.
Sure, sir. And when we are probably looking at inorganic growth, sir, are we probably looking at acquiring some technology, or are we looking to probably penetrate in certain markets by acquiring company? What would be our focus on the inorganic? Hello?
When we talk of inorganic growth, there are various avenues that are available to us. We are looking at sales and marketing alliances with companies in various parts of the world. We are looking particularly in Europe. We are also looking at acquisition of smaller family-run companies, again in Europe, that would onboard technology also, and that would onboard markets also at the same time. We are also looking at joint ventures as an opportunity. So there are various avenues that are currently available, and we are actively seeking those avenues.
Sure, sir. And sir, would it be possible to share the breakup of the order book which we have as the March end?
Could you please repeat that?
Sir, breakup of outstanding order book between three businesses, converting, co-extrusion and packaging, sir.
As on 31st March, our order book stood at about 74 crores.
That includes 30 crores.
That also included deferred sales of 30 crores.
Okay. Would it be possible to share the breakup, sir?
Sorry?
Can you share the breakup? How much is packaging machine, how much is co-extrusion, and how much is converting machine?
We can share those figures on one of these days on one-on-one basis.
Sure.
I would not strategically like to give a breakup at this point in time.
Competition.
Right. Okay. And last question, sir, on the margins front, we saw that this quarter our gross margins and EBITDA margins both improved significantly. And for the full year also, particularly gross margins went up to almost 61%. And in this quarter, it was 64%. Any particular reason for this increase? Is it probably attributed to higher sales of attachment and spares in quarter 4? And how should we look into it, sir, going forward on the margins front?
The margins actually expanded by about 2% if we compare the entire year. And this 2% margin expansion was on account of two things. One was that in bag making and pouch making, we had some strategic decisions as far as pricing is concerned in previous year, and that found traction in the current year. So that is something that helped us. Second, as I said, there were certain design changes as far as framing of the machines were concerned, and that has saved us some cost. And thirdly, it was sales of these barrier extrusion blown film lines in exports where our margins were higher.
Okay. And how should we expect, sir, going forward, like this
year?
Year 20?
Remain stable at these margins at least for a year going forward, unless, of course, there is some kind of a Six Sigma event that is not in our control, and that happens in Europe or in US.
Thank you. Mr. Goyal, please rejoin the queue for more questions. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Maitri Shah with Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, you are audible.
Hello. Yeah, so with our new packaging patent that we have, and also that we are going to grow in Middle East and everywhere, so what sort of expansion in top line are we expecting for FY'26 and FY'27?
We have always said that if we look at our 3 revenue streams, then bag making, pouch making, as well as our extrusion is likely to grow at between 10 and 15% going forward, while we have always maintained that packaging will grow much faster. We're looking at between 30 and 40% growth. That is what we want to drive this company towards, and that is what we are working on. So that is how it will pan out over next year and year after that in near-term basis.
Yeah, that is it from my side. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Sanyam Shah, Solidarity Advisors. Please go ahead.
Hello, am I audible, sir?
Yes, you are.
So we have been guiding for 15-16% steady-state EBITDA margins until last quarter, and we have done 20-22% in the last 2 years. So do you think if I take a longer-term view, are these EBITDA margins sustainable, or we will be gradually moving towards 15-16% again?
EBITDA margins have always improved. Current EBITDA margins of plus or minus 20% are sustainable and may possibly improve, in fact, with our scale of operations growing further, since operating expenses aren't expected to rise proportionately.
Okay. And sir, we did guide for machine level growth, like segment level growth for the next 1 or 2 years. So can you give me a longer term number for growth we should work with?
In machinery business, we normally work on a horizon of about 18 months. We don't have any granularity beyond 18 months. So I would not like to hazard a guess on that one. As I said, our intention is, and that is what we are working towards continuously as a company and as a team, to achieve the growth on various product lines that we have in the percentages that I have talked about.
And sir, can you please explain in a bit granular detail what could be the drivers of this growth?
The drivers of the growth, if we are talking about packaging, the drivers come from the fact that food processing is growing. For example, snack industry, packaged snack industry in India is growing at rate of about 28%, and therefore more machinery is needed to package food. Secondly, there is this migration since COVID where packaged food has become a necessity for most of the people. So loose food is not being sold at all, and therefore packaging industry as a whole has been registering a double-digit growth in India for last 3 years, and it is likely to continue for next 5 years. That is one. Second, we are adding new geographical areas to our basket, particularly for packaging machines in Middle East, Africa and Europe, and that should bear fruit, because one has to understand that as a company, we are already present in those geographical areas for bag making and pouch making, and we sell our bag making and pouch making machines in around 80 countries around the world. So we know what these markets stand for, what are the logistics involved, how to go there, whom to talk to and things like that. And our presence of bag making and pouch making in those countries is something that we would be leveraging over a period of time for our packaging machines too. So the growth will come from these two opportunities.
Sir, thank you for the detailed answer on this. So can you please also explain the drivers for bag and pouch making and the extrusion machinery business?
Bag and pouch making machines is something that is a mature market. Globally, our brand is really well recognized, and we participate in almost every major exhibition around the world. In fact, there is a major exhibition that is happening this year called K 2025 that will happen in October 2025, and that is an event that always boosts sales for Mamata going forward. So that is one thing. As far as extrusion is concerned, I have explained that multi-layer barrier film is a highly growing market around the world, because that allows you to have barrier films that are recyclable, and that is what we are betting on, and that is something that found traction year before, and therefore we have grown last year. And even in current year, we have a very healthy order book as well as a robust pipeline to achieve similar figures, if not the growth, because that growth was insane. That was something like 230% odd. So we can't repeat that, but we will be able to maintain and sustain similar sales in this year also.
Okay, sir. Thank you. I'll get back in the queue.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Mausam Shah with Wealth Guardian. Please go ahead.
Hello. Congratulations, sir, on a good set of numbers.
Thank you, ma'am.
So just wanted to know the breakup between the number of machines sold within India and outside India.
Oh. year we sold 238 machines, out of which 152 machines were sold in India and 86 machines were exported.
Okay. Okay. Thank you, sir. And also, I just wanted to know what is the bifurcation in terms of the revenue from the top 1 and 3 customers?
Top 10% of our customers, this is a stated fact, top 10 customers of Mamata contribute only 20% of our revenue.
Is it required to?
As per DRHP, last year it was 32%.
Yeah.
So just wanted to confirm.
That is also with a disclaimer that the top 10 customers change every year.
Yeah, that is
because
true.
Same set of customers do not keep on buying it.
Okay. Okay. Thank you so much, sir. That's it from my end. Thank you and all the best.
Thank you.
Thank you. The next question comes from the line of Lala Ram Singh, an individual investor. Please go ahead.
Good evening, sir. And,
good evening.
First of all, I want to appreciate the detailed investor presentation and the communication with the Secretary Division. It's very helpful. I have 2 questions. One is to support the intended growth across different divisions. What do we need more hires in key positions like we have done one recently? So want to understand that. And number 2, beyond hiring, what else are the key challenges that we need to overcome in order to realize the potential in all the segments?
Okay. Hiring people is a necessity because you need feet on the ground, and we are doing that. And it is easier said than done because finding people who are experienced and who are motivated and committed to deliver the results that we demand is not very easy. But having said that, we continue on that path of recruiting people that we think can take us forward. And that is an ongoing exercise that we started sometime last year, and we will continue during this year also. But besides that, the challenges are not only people. The challenges are recognition of India as a destination for world-class machinery, and that is the challenge that we constantly face, and that is the challenge that we have to overcome. Because even today, when you are looking at people globally and talking to them, people think that good software can come from India, or very good quality basmati rice can come from India, or very good clothes can come from India. But when you talk of absolutely top-class machinery coming out of India, there are still question marks as far as people's perception is concerned. I'm not saying that this is true. India does build world-class machines, and we will continue to improve on that, but it is a perception that we have to overcome, and that can be overcome only over a period of time.
So just a follow-up question on this point. So being in this business for more than 2 decades, how far have we come on a scale from 1 to 10 with respect to perception? Where are we today? Is it closer to 3, 4, or is it closer to 6, 7? Just want to understand that.
We are close. I would like to say, if we are talking of Mamata, just Mamata machinery, we are at 6, 7. If we are talking of overall Indian industry, I would put it at 5.
Okay.
So we are ahead on the curve as far as rest of the industry is concerned.
Got it. Sir, can I ask one more question?
Mr. Sen, sorry for interrupting. Can you come in the range? Your voice is muffled.
Yeah. Is it better now?
Yes, better.
Please go ahead.
Yeah. One more question is on the inorganic route usage of cash. I want to understand the high-level philosophy. So, have you already identified key product gaps or key gaps in the market that you want to target? Or is it more driven by availability of opportunities in the market and then trying to evaluate the fit with Mamata?
We are looking at inorganic growth opportunities, particularly in the ambit of packaging, and that too flexible packaging. So when you start looking at flexible packaging, there are various aspects to flexible packaging. We manufacture horizontal form fill and seal machines, and we also manufacture vertical form fill and seal machines. But for example, we do not manufacture, as of now at least, we do not manufacture what is known as flow wrap machines. So there is one gap in our portfolio, generically speaking, as well as far as flow wrap is concerned. Now these are basically primary packaging machines, and then you have secondary and tertiary packaging machines. So these are the machines that basically collect the output from packaging machines, and you can have things like case packers, you can have things like palletizing machines, you could have output handling, robotic equipment. On backward side, you can also have various kinds of filling systems. So generically speaking, the gaps that we would be looking at is filling systems of various kinds. We would be looking at secondary and tertiary packaging opportunities, and these are the companies that we would be identifying, and these are the technologies that we'll be identifying to deliver inorganic growth.
That's very helpful, sir. So if my understanding is correct, you effectively would want to cross-sell to your existing customers, right, within their value chain of manufacturing.
We would like to offer a complete solution, end-to-end solution, eventually.
Okay. One last question is, for these opportunities, is there a ticket size that you have kept in mind that we don't want to spend more than X crores, for example?
I would not like to comment on that question at this time.
Sure, sir. I respect that. Thank you so much. And I wish you all the best.
Thank you.
Thank you. The last question comes from the line of Lakshmi Narayanan with Tunga Investments. Please go ahead.
Thank you again. So just you talked about, that your top 10 customers keep changing. And my question is that what percentage of your revenues are actually some kind of a repeat in nature, that you actually sold this to the client or the customer, a couple of years back and so on. And then second question is that when you sell, do you sell to the client or you sell to the project management consultant or you sell to the agent? What does a typical sales cycle look like? These are the two questions.
We do not normally sell on a stock and trade basis. We normally sell to end user directly. Yes, there might be an agent involved in it, but then that agent would either be facilitating sales or doing post support on the equipment that has been supplied. But their role is not of stock and trade. So that is one. Because we like to understand as to what is going to be exact end use of the machine that we are selling. And for us, it is very important that we are able to deliver appropriate solution to given customer.
Got it. So you don't sell via these project management consultants who actually assemble the entire?
No, we always interact with project management consultants. They are an extremely important chain as far as decision making on behalf of our customers, because they are consultant to our customers. But normally consultants are viewed as neutral entities, not requiring to be rewarded in cash or kind, and it would not be ethical to do that.
Got it. And how do you track your repeat business?
Through performance.
No. I mean, what percentage of your revenue is repeat in nature?
I think we have mentioned it in our RFS.
Then I'll pick it up from there.
It is around 55% is repeat business.
Okay. So then one other question. So do you work with multinational companies like Huhtamaki, PPL, Amcor, etc., or they actually prefer imported machines? How does the landscape look like?
Huhtamaki, all the three names that you mentioned are our customers globally.
Okay. And in India also, you will be supplying to them?
Yeah, Amcor, I believe they have 5 facilities so far in India that I know of. There might be more, but we are present in at least 3 of their facilities.
Got it. And another thing, so if I look at the entire the flexible manufacturing process, there are always attachments like vacuum or things like that. So do you also provide attachments that will help in vacuumizing, that will help in some differentiated packaging? Is that something which you do also?
We offer attachments for example, you're talking of modified atmospheric packaging. So we do offer flushing equipment that works inline in terms of, say, carbon dioxide flushing or nitrogen flushing and things like that. Yes, we do.
And in terms of your end market, is it, it looks like most of it are actually consumer goods. Now, is there a mix between dry / wet / medical, any kind of mix in terms of your end industry? Is that something which you would like to talk about now?
We are currently working and focusing on dry food products. That is the focus area. We are working on entering into liquids.
Liquid and powder.
Got it. And there's no medical related thing?
Medical is a very different, again, somebody else asked a question about what gaps do you see. That is one of the gaps that we see. See, OTR, OTC products, we are already there as far as, for example, we do supply for what you call this Eno type products. We do supply machines to pack those. But when we are talking of specific high hygiene machines that are required for medical packaging, we are not yet there. And that is one of the gaps that we are looking at.
One last question, if I'm speaking. So, in the previous call, it was mentioned a particular annual growth could be achieved. Looks like it didn't happen. And you also mentioned there is a 35 crore order spill over to the next quarter, which is Q1. So, when you looked at last year, around the same time when I say last year in the last call, there has been a departure from the expectation. So, why is this so?
It's because these orders were deferred. By the way, I didn't mention 35 crores. I said they were approximately 30 crores.
Got it. Fair enough, sir. Thank you so much again for detailed answers.
You're welcome, sir.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I would now like to hand the conference over to Mr. Apurva Kane, Chief Executive Officer, for closing comments.
Thank you very much, friends, for giving us this opportunity for today's interaction. We hope that we have been able to answer most of your questions to your satisfaction. If there are any further clarifications or questions, please contact our IR agency and they will help you understand our company and our company's operations better. Thank you very much till we talk to each other next time. Thank you so much.
Thank you. On behalf of Mamata Machinery Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.